Understanding mutual funds, a beginner's guide. A mutual fund is a type of investment vehicle that pools money from multiple investors and invests it in a diversified portfolio of securities such as stocks, bonds, and other assets. Each investor in the mutual fund owns shares, which represent a portion of the holdings of the fund. Here are some key concepts to help you understand mutual funds. 1. Diversification. Diversification is a fundamental principle in investing. Mutual funds pool money from multiple investors to create a diversified portfolio of securities. By investing in a variety of assets such as stocks, bonds, and other instruments, mutual funds aim to reduce the impact of any single investment's performance on the overall fund. Diversification helps spread the risk, as different securities can have varying levels of volatility and respond differently to market conditions. The goal is to achieve a balance between risk and potential returns. 2. Professional management. Mutual funds are managed by experienced professionals who analyze market trends, evaluate investment opportunities, and make informed decisions on behalf of the investors. These fund managers have access to extensive research resources and use their expertise to build and manage the fund's portfolio. Their goal is to maximize returns within the fund's stated investment objectives. Investors benefit from the expertise of these professionals, especially if they do not have the time or knowledge to actively manage their investments. 3. Types of mutual funds. There are different types of mutual funds, each with its own investment focus and strategy. Equity funds, also known as stock funds, primarily invest in stocks of various companies. They can be further classified based on factors like market capitalization, large cap, mid cap, small cap, or investment style, growth, value, blend. Bond funds invest in fixed income securities like government or corporate bonds, providing regular income to investors. Balanced funds, also called asset allocation funds, invest in a mix of stocks, bonds, and sometimes other asset classes to achieve a balance between growth and income. Index funds aim to replicate the performance of a specific market index, such as the S&P 500, by holding the same securities in the same proportions. 4. Net asset value, NAV. Net asset value represents the per-share value of a mutual fund. It is calculated by subtracting the fund's liabilities from its total assets and dividing the result by the number of outstanding shares. The NAV is usually calculated at the end of each trading day and helps determine the price at which investors buy or redeem mutual fund shares. The NAV reflects the current value of the fund's underlying investments and changes as the market value of those investments fluctuates. Investors can track the NAV to assess the performance of their investment and make decisions accordingly. It's important to note that while NAV is an essential indicator, it does not account for any sales charges or expenses associated with buying or selling mutual fund shares. 5. Sales charges and expenses. Mutual funds may have sales charges, commonly known as loads, which are fees paid when buying or selling mutual fund shares. Front-end loads are charges applied at the time of purchase, reducing the amount of money invested. Back-end loads, also called redemption fees or deferred sales charges, are incurred when selling shares. Some mutual funds, known as no-load funds, do not charge sales loads. In addition to loads, mutual funds have operating expenses, including management fees, administrative costs, and other expenses required to run the fund. These expenses are expressed as the expense ratio, which represents the percentage of the fund's assets deducted annually to cover these costs. 6. Returns and risks. Mutual funds generate returns through capital appreciation and income. Capital appreciation occurs when the value of the fund's underlying investments increases over time. Income includes dividends from stocks and interest from bonds held within the fund. It's important to note that mutual funds come with risks. The level of risk depends on the types of securities held within the fund. For example, equity funds are generally considered more volatile and carry a higher risk than bond funds. The value of mutual fund shares can fluctuate based on market conditions, and there is no guarantee of positive returns. Investors should carefully assess their risk tolerance and investment goals before selecting mutual funds. 7. Prospectus. A prospectus is a document provided by mutual funds that contains detailed information about the fund's investment objectives, strategies, risks, fees, historical performance, and other pertinent information. It is essential to read the prospectus before investing in a mutual fund, as it helps you understand the fund's characteristics and make informed investment decisions. The prospectus provides insights into the fund's investment philosophy, the types of securities it holds, and any associated costs. It also includes important legal and regulatory disclosures. Reading the prospectus allows you to evaluate whether the fund aligns with your investment goals and risk tolerance. 8. Investment goals and risk tolerance. Before investing in mutual funds, it's crucial to assess your investment goals and risk tolerance. Investment goals can include saving for retirement, funding education, or achieving long-term growth. Your risk tolerance refers to your comfort level with the potential ups and downs of the investment. Some individuals may have a higher risk tolerance and are willing to accept more volatility in pursuit of higher returns, while others prefer more conservative approaches. Consider your time horizon, financial circumstances, and personal preferences when selecting mutual funds. Different mutual funds have varying risk profiles and investment strategies, so it's important to choose funds that align with your objectives and risk tolerance to create a well-rounded investment portfolio. Understanding these concepts will help you navigate the world of mutual funds and make informed investment decisions. It's always advisable to consult with a financial advisor or conduct thorough research before investing to ensure your choices align with your specific financial situation and goals. At last, don't forget to subscribe our channel.